Keith, moving to the queue here, there's a question here on all of on the large buyback announcements from some of the bulge bracket banks that have come this week.
Buybacks.
How can the banks afford to increase dividends and buybacks when their earnings outlook is so dire?
No, but they just have to, man. That's the next thing. When you don't have earnings accelerating or revenue, a revenue growth model that's accelerating, you know what you got to do, Ben? You got to buy back the stock, man. You got to buy back the stock. You got to buy back the stock. You know, that's the bull case. Is that you ruin the balance sheet now that you don't have a revenue and income story to tell. You got to ruin the other thing that you got left. You know, that's what you got to do. That's how you get paid if you're an executive. Executives get paid in earnings per share growth, so you reduce the share count, and you hope to God that you can lower the bar low enough so that your board signs off on it and you get paid. I hope everyone understands that. I mean, the concept that the Fed now is bailing out the banks with allowing them to buy back their stock because the Fed has completely shellacked the yield curve. That's funny. I mean, I think that's kind of funny. I mean, the central bankers, don't forget, the central bankers work for the banks. You know, that's the deal. You know, I didn't elect, because I don't elect anybody in the U.S., but Ben Ryan, you as an American and your military family did not elect Bill Dudley to run the New York Fed, did you? I don't think you did. The bankers, the central bankers were elected by the banks. You know, Bill Dudley used to work at Goldman Sachs, and the head of the New York Federal Reserve is Bill Dudley. And that's the banks were supposed to be protected by the central bankers. Then the banks were basically given a profit matrix that no longer made sense as bond yields went to negative in some worlds, parts of the world, and then completely pancake yield spreads, or the net interest margin spread that a lot of banks like to chow on, which is less relevant obviously for Goldman Sachs, but much more relevant for Jamie Dimon and Bank of America. So now it's the central bankers themselves that are imposing pain on the bankers that they work for, and in turn they give them a bone saying, but you could go blow up the balance sheet again, just go lever up and buy back some stock. I love it.